Traders, what's up? It's Dave, Market Scalper D. I did a little bit of research today. I was watching that market during the pre-market. You can see right here at 4 o'clock, 4 a.m. about as soon as those algorithms turn on, huge dump on the S&P 500 ETF here, the SPY ETF. The only way you can make money in this area is using SPX, which is trading the actual index. Because unfortunately, you're pretty much trapped in those positions if you're expecting a gap up or gap down. Today, if you were, of course, expecting a gap down, you printed some money right here on the open around 9:30. But look at this massive drop right early in the morning. Everyone's sleeping, 4 o'clock. They come creeping out, algorithms turn on, and boop. They kind of figure out where they can hit all these stop losses because there's low volume. And I was looking at this online. You can see here, market makers dumping the S&P 500 trust, right, which is the SPY, at 4 a.m. When the pre-market opens, allows them to trigger cascading retail stop losses, right? Fill resting orders at manipulated prices and establish structural hedges on the derivatives like the option chain, right, before the official trading starts to unfold, right? And you can kind of do this every day. The market does something unexpected, just Google it. Try to figure out where the edge is and knowing why the market mechanics do what they do and at the times they decide to make these moves happen. You can see the pre-market dump. It's calculated strategy that leverages the mechanics of low liquidity trading hours, right? The advantages for these institutions are basically liquidity hunting, right? Pre-market trading suffers from an extremely low participation and thin order books, right? So these algorithms turn on and just force the price where they need them to go so they can figure out where they're going to be leveraging today's price action, right? Market makers can drop the price quickly with minimal capital, forcing retail stop loss orders to trigger. This essentially creates an artificial dip they can use to accumulate shares at a deep discount, right? If we go back to today's price action, you can see here, it's not a coincidence, right? On the opening bell, a little bit of a fake out, right? And then boop, right back to that level, they drop it again, right? So just very interesting price action today. I've always been fascinated by the financial markets. A lot of the SPY commands a vast majority of options open interest. Market makers who are short put options or long call options might aggressively adjust their hedges during these early hours to mitigate overnight risk before the main session begins, right? So they're already setting the traps, right? Our job as a trader is to just trade that price action, right? There was some money to be made right here on the way down today. And then all the way back up, you can see a lot of these calls in the money right now. Again, they're hedging the risk, trying to get a lot of these puts that were in the money out, right? So they can basically get you off the position so they have less hedging to do and less risk to take, right? But yeah, a lot of these in the money calls, those 742s were looking pretty hot earlier. You can see the amount of money that was made right when the market started to become bullish. $77 with the right entry, right on the dot, 11:30. That's why I always say be paying very close attention to these even numbers in the market. 10:30, 11, 11:30, 12:30. You can see right here, 11:30. Boop, trend change, right? So try to use those times to kind of hedge against the possible I got you, right? At what point do they basically bring these areas back out of the money is also something I'd be paying attention to go short, possibly before the market opens. But hey, I'm just a retail trader, not financial advice, but not bad returns, right? $100 or so, right? $100 you're selling for $389 at 1:30. You could have just been out. If you're trading with 10 contracts, even right now, you're selling for almost $3,290 and you're out. but I would have probably tossed these things along at 130. But yeah, not a bad gain today on the call side. Why these market makers are all hedging their positions. Of course, you don't want to be trading with squiggly lines. You know, you want to really get good at price action and always be expecting reversals, right? Don't get too caught up in one area. There's always going to be, even if we're starting to get on the bearish side in a higher lows kind of situation, always be ready to try to make money up and down in the market. And let's see how the rest of the day unfolds till 4 o'clock. You guys take care and stay green.